There was an interesting article on prop firm statistics published on TradingView recently, titled "The Dark Side of Prop Trading: Factors Leading to Financial Loss." Loss for the trader, not the prop firm, of course. It was written by Lindgren, and it references a 2023 study that surveyed 10 randomly selected prop firms in the USA, as well as 3,000 traders who had engaged with these prop firms. The study also included data from the CFTC, statistics from the ongoing investigation into the scam prop firm MyForexFunds, as well as publicly available information on FTMO. Probably the biggest headline is that some 94% of traders failed to complete the challenges during the first or the second phase, because they failed to meet either the profitability or the drawdown requirements. Among those who failed, 73% of traders believe their outcomes are unfair, attributing their failures primarily to the prop firms rather than to their own mistakes. They claim that the firms manipulate results, therefore undermining their chances of success, which totally makes sense because for many prop firms, the primary revenue source, or perhaps the only revenue source, is the challenge fees. In fact, some 61% mentioned they encountered technical problems such as unreliable quotes, slow platform performance, and unexpected widening of spreads. Many brokers and prop firms love to advertise their low spreads because it seems like most retail traders only have two requirements when choosing a broker: low spreads and high leverage. Other transaction costs like slippage are much harder to keep track of, and the impact of swaps is often underestimated or even completely ignored. Spreads are of course highly variable over the course of the trading day, and some sneaky prop firms or brokers might unexpectedly widen the spreads, possibly causing you to be stopped out. So, if you are concerned about spreads, you don't have to sit at your desk all day long staring at prices. You can write an EA that records the spread at 1-minute intervals. The logic for this EA is very straightforward. You first assign a variable to the spread, which is calculated using this pre-programmed spread in pips function that finds the difference between the bid and the ask prices. Then, at the open of every bar, the EA will log the spread in this spreadrecording.txt file, with the message being the current spread is so and so pips. If you attach this EA to the M1 chart, you will record the spread every minute. If you only need it every 5 minutes, use a 5-minute chart instead. So I tried this on my own broker, Afterprime, which I've been using for many years. They are a very good broker, but I'm not an IB, and this is not a promotional video. I chose to record spreads over a 24-hour period from 5 PM on September 18th to 5 PM on September 19th, 2024. This period was chosen because there was going to be plenty of high-impact news, starting with the US federal funds rate at 9 PM, followed by the UK interest rate decision on the following day, as well as the unemployment claims in the US. Here is how the output TXT file looks like. I then open it in Excel using the commas and the semicolons to separate the spread value. This is the plot of the 1,436 values over the 24-hour period. You have this spike here to about 30 pips that occurred at 9 PM when the Fed funds rate was released. And of course, you have the usual widening between midnight and about 1:30 AM, where you should try to avoid any transactions. And finally, you have this spike here at 2 PM when the UK interest rates were announced, and this spike here was for the US unemployment claims. These short-term spikes are in response to liquidity or volatility issues and are perfectly normal. Every broker will have them in varying degrees. For the rest of the trading day, spreads were low and stable, often below 1 pip. Even with these crazy spikes, the average spread over the 24-hour period was only 1.03 pips, with the RMS spread being 4.6 pips. So if you are concerned that your broker or prop firm is quietly screwing you over with spread widening, you can use a simple EA like this to monitor it yourself. Do this comparison for a few brokers, and you will find that some are not exactly low-cost brokers like they claim to be. Of course, there are many other sneaky ways that prop firms and brokers can quietly hike their transaction costs. Some resort to crazy swap markups. I have seen some brokers where the swaps for gold are negative in both the long and the short directions, but perhaps that's a discussion for another day. So do your own broker research the same way you research your trading systems and your markets. I'll see you at the next one.